Good morning, good afternoon, and good evening to the rest of you. Welcome to another episode of Bitcoin Magazine Live. I'm your host, Q, coming to you yet again from my mother's basement, and I'm joined by my co-host, P. How goes it, P?
It goes fantastically as always. And yeah, I'm excited for this conversation. Let's dive in.
We got a jam-packed episode today in store. We're going to kick things off with our BM Pro segment, and we are joined by special guests from Ark Invest. And then after that, we'll be having an interview with Seed Signer, and then, of course, news and notes with your favorite trio. But let's kick things off with the BM Pro team. Dylan, LeClair, and Sam Rule have joined us, and we have none other than David Puell, head of OnChain research at Ark Invest, and Frank Downing, handling crypto OnChain analysis as well. Gentlemen, how are we all doing today?
It's great. I'm excited to chat. It's certainly a lot of stuff has gone down in the last 2 months. So, our job as analysts, kind of detectives of what's happening, has been exciting, to say the least, while, half the industry has imploded, but not something we can control. But yeah, excited to break it down with these guys.
Well, let's kick things off there because there was very big news this morning that Dylan, I think you've been at the forefront of covering. Yet another company getting caught up in this contagion, and this time it's Voyager now filing for Chapter 11 bankruptcy. I open the floor to anyone to just maybe touch on what led to this point and what the fallouts may look like going forward.
Yeah, I'm happy to kick it off, but it's great to be here. We've been watching this space over at Ark for some time as the events have unfolded over the past 2 months, kind of leading up to this point. And it's kind of all a series of dominoes that have kind of fell one after another, starting with the collapse of Terra back in the beginning of May. It's something that we were watching really closely. Kind of this algo stablecoin concept that proved to totally fail and unwound like $60 billion of market cap over just a few days. That seemed like it was relatively isolated at the time, in that 70% of that UST stablecoin was just in the Anchor lending protocol. This false pretense of 20% stable yield. So it was a coin that really just existed to yield farm. But what we kind of soon learned is there are other, notable parties in the crypto space that were kind of tangled up in that giant yield scheme, namely Celsius and Three Arrows Capital. Celsius exposure through liquid staked ETH that they were using as collateral on the platform, and Three Arrows as investors in Terra, and notable party who came to their defense as the peg was unwinding. Those two parties also have been brought to their knees. You saw Celsius pause withdrawals, most of that because their DeFi holdings were public on chain, and we could see exactly how much liquid ETH and wrapped Bitcoin they had and how much was borrowed against it. And Three Arrows, being a party that had tried to defend Terra, we learned had borrowed from pretty much everybody under the sun, in some cases collateralized borrowing from BlockFi or Genesis where their positions were liquidated. In other cases, because of their reputation and name brand in the space, borrowed uncollateralized from parties like Voyager, $650 million uncollateralized loan that now that these trades have gone against them, they're going bankrupt, and so is Voyager along with them.
It seems like it's a never-ending contagion spiral. We've seen so many of these companies, and I know, Dylan, you've spent a lot of time, and last week you and Sam released the monthly report highlighting a lot of this contagion, and actually, specifically, we're talking about Voyager possibly being the next domino to fall. Sorry, man, the long weekend really got to me, guys. How are you guys feeling about this bankruptcy? A little bit validating, I'm sure, but also, is this a cause for maybe some more concern? I'm going to throw out some price action thoughts here for a second. Do you expect some more downside as the result of something like this?
From the Voyager event, not really. It was obvious to me once we started to see this contagion really take hold in mid-June. I started going through, and not many of these entities are public. Like Celsius doesn't publish, their balance sheet or income statements or anything. But of the few that did, Voyager was one of them, and it was you could see that they actually had $350 million of exposure to a Singapore-based entity. So it was like speculation, but to me, I kind of have an ongoing thread where I just post some updates to all this craziness. But it was, hey, Three Arrows Capital's insolvent, and if these guys are on the hook for 350 million at the same time that their shares are down 33% in 2 days, maybe something under the surface is wrong. And not sure about the exact numbers of their balance sheet right now off the top of my head, but basically all of their customers' assets, like it was like a fractional reserve bank that took a huge impairment loss. Like they didn't actually have any equity capital to cushion the massive default that they took on an unsecured loan. Like that's the craziest part about it, is they were lending customer funds out unsecured to hedge funds that they thought were industry titans and were money good plus an interest rate. And the reality was they weren't money good, and they completely rugged Voyager. And really the sad thing is Voyager's customers' deposits. Any equity cushion that Voyager had or had grown over the bull market completely evaporated in an instant. And so that's why when SBF came out, it was like, hey, we're extending a credit line. It was just like, okay, this seems like a nothing burger, because what is the point of lending to an insolvent business? If the business is insolvent, there's no way that they can lend. And once, Voyager opens up deposits, all the money's going to run. So that was just like, for me, not just trying to pick on Voyager here. It's obviously a lot of companies are tangled in this mess, but a huge loss it's irrecoverable, and it's really sad that a lot of people are going to lose their assets. It's why I've been, very outspoken about it. I'm not trying to hurt any business or any person, but that's just the reality of these type of things.
Just a gentle reminder before I let the rest of our panelists discuss, but nothing discussed here should be viewed as or considered financial advice. Everyone must do their own due diligence. If you're listening to a bunch of people, talking heads online, and make financial decisions off of that, sir, madam, you are absolutely batshit crazy. I do want to ask David, what with all of this contagion that we've all been seeing around the markets, how is this sort of transpiring or being reflected on the on-chain analysis that you're seeing? Are there any metrics in particular that you're paying closer attention to now, especially in the midst of this bear market?
So of course we got capitulation. In terms of on-chain, you can review several metrics on a historical basis. Famous examples of that: MVRV, percentage supply and profit, stuff like that. They are getting to historical levels of absolute capitulation. To give you context, historically, the percentage supply and profit of Bitcoin should be about 45% at loss. We hit 50% or so. So, but still, we are below realized gap and the very reliable so far 200-week moving average. That has happened only like 4 times, I believe, in the history of Bitcoin. For the 3rd time, we penetrated realized gap and every single major cost basis, long-term holders, short-term holders in the market. Within that, this suggests that it could imply an accumulation range, let's say between 16, 20, something like that. But in terms of precision, especially given the uncertainty of the contagion in the crypto markets, that is, you're seeing smaller and smaller entities collapse, which is a good sign. But most worrisome could be the macro uncertainty, especially as Bitcoin has picked up in its correlation since COVID with equities and the broad market. So we're keeping an eye on that. In terms of accuracy, historically, the zone being under the cost base of the market, it has been historically a good accumulation area. But given the market uncertainty, we're keeping an eye on that and balancing those two, confronting views at the moment.
So, David, you have not been subject to my favorite question. Sam and Dylan, I can already hear you snickering over this, but what are your thoughts on just the general correlation we saw leading into the correlation with the NASDAQ and Bitcoin price leading into this downturn? And do you expect this correlation to have broken at any point in the near term or short term?
That's actually a great question in the sense that we believe there's a major dislocation in the market in terms of pricing things in general. To give you the context, in Ark, right, we hold from genomics to Bitcoin. Seeing that divergence, like why should a price of a biotech company should be correlated with Bitcoin at any given time, given their completely different value propositions? So that correlation in the broader markets, let alone Bitcoin, just signifies to us a major disequilibrium in the market and inefficiencies in pricing and valuing things. On the context on when the decoupling could be expected, that's hard to do because one, since COVID, we've had a major inflow of institutional participants, and those participants have take lead in the price discovery on centralized exchanges, etc. For Bitcoin, and therefore in a correlative manner the whole crypto ecosystem. So within that regime, it's hard to guess when the correlation is going to stop because it has unfolded both in a bullish primary trend and a bearish primary trend. Regardless of that, I do think a best way to look at Bitcoin is a debasement hedge as opposed to an inflationary hedge, which I think is part of the narrative. James from Glassnode discussed this privately with me, and I tend to agree with that. I think once the market stops valuing assets as on a per market cap or liquidity or float basis and return to a fundamental appreciation of things, we should see a decorrelation between Bitcoin and equities and through the diversification in the equities ecosystem as well.
I love that. Very hopeful and optimistic, and we will see as time plays out if this decoupling does take effect. Sam, I would love to just give you the opportunity now to share your general thoughts. We've talked a lot of things, and I will let you sort of discuss any of the points that we've discussed that resonated well with you.
Yeah, certainly. I'll bounce around a little bit here. So I'd be curious too what other people found through the contagion. We've talked about it the last couple of weeks, but curious what people have found kind of the most shocking or most interesting part of it that they didn't know before. On the Voyager side of things, I don't mean to index on Voyager, but it seems like it's just kind of company topic of the day. For them, it's just kind of the massive amount of unsecured lending that was in the system, not just across Voyager, but across everywhere else, where as we've seen that now they're going through bankruptcy. BlockFi seems like one of the lending shops that might survive here with the injection from FTX, and they even had a loan to value ratio through Ares Capital and 75%. So pretty shocking just to see the amount of unsecured lending rolling out here. General thoughts is that of those forced liquidations, those are probably the worst have happened, going down to that 17,000 range. It's interesting that the CME futures on that weekend as well didn't even really budge in kind of the other side of the market to reflect that, which also would tell me another signal with on-chain kind of capitulation indicators that probably have further to go there, as maybe some of that drawdown pain is not realized in the full extent of the market. But I'd be curious to hear, everyone else's thoughts too on if they think kind of the worst is over here from the contagion side. I mean, I can say from the macro side, Dylan and I have talked at length about being, pretty bearish since over the last few months, and then doing some of these spaces and being bearish sometimes is not fun, but almost see that Bitcoin, whether you look at it from an equities correlation standpoint or just from an economic cycle standpoint, it all becomes one trade. And as David mentioned, it gets certainly the value gets removed from its fundamentals. So right now, when some of the stuff looking at is kind of the latest trends in PMI data and kind of leading index for that, looking at some of the bear market kind of cycle rallies, comparisons of where equities are, looking at kind of earnings and PE ratios kind of turning over in the traditional space. So it's hard to tell, with that liquidation move with Bitcoin, that's kind of like a 15% move from 20,000, where kind of CME futures didn't move at all. And you have equities at large, you can take the S&P down 22% for now. And thinking that, okay, my more base case is that those have more 30 to 40% range to go, kind of peak to trough, to drawdown peak. So thinking that, Bitcoin is probably going to hold up those relationships over time. I'm still pretty bearish overall in the market. I'm still pretty bearish in the sense that we haven't seen the full extent of kind of like the liquidity and the insolvency issues that are going to float on the surface, probably seeing the majority of them. But I mean, just now we're seeing Voyager go through bankruptcy. So it's almost like every day we're seeing a new company or a new shop kind of announce something that just doesn't bode well for the space. So it seems like we've got more cleansing to do on that front.
Just to chime in on the contagion and what's kind of surprised us, I would say, like Celsius having to pause withdrawals wasn't a surprise, partially because we could see all of their balances on chain. And I think on chain in general is something that's given us a lot of confidence and conviction as we've dove deeper into the space over the past few years. What surprised us was the leverage buildup off chain that you can't see, that uncollateralized lending. Three Arrows Capital in particular was a surprise. And I think, some of those details about, how they were managing funds. For example, they would manage the treasuries of portfolio companies that they invested in. So they write a $10 million check, and that to a new protocol, and that protocol turns around and gives them that $10 million back to manage while they're not using it. And so if Three Arrows goes insolvent with that fund, now you have a protocol that's lost part of their treasury. And that was kind of this hidden management that they were doing that we couldn't see. And those are kind of the more scarier things. What's happening off chain in this kind of centralized market that you can't see and don't have transparency into. And then on just kind of, Bitcoin versus equities and where the market could bottom. I think one thing that gives us, it's impossible to say whether we've really hit a bottom or not. And I think given the macro headwinds, it's safe to say that there's probably more to go, given that, the crypto market cap's already down 70% from all-time highs. It's possible that, if we're heading into recession and the broader market definitely sells down more, I don't think crypto is going to be immune to that. It may bottom quicker, and if it bottoms quicker, then it may lead the rally on the other side.
We've seen, with the correlation with Bitcoin in the markets, we've seen sort of this forward trading aspect of Bitcoin. I myself have taken full advantage of this, but we have never seen Bitcoin trade or alive, quite frankly, in a macro environment that saw a recession. We are weeks away from what I believe will be the second quarter of a negative GDP reading, which will trigger a technical recession in the broader markets. What impact does this have on Bitcoin in particular as the larger economy has to deal with a recession? Dylan, I'll start with you, and then David.
Yeah, I think that we are, and since basically the early Q1, some really, really smart macro investors figured it out in November when inflation continued to accelerate, and bond yields were still less than 1%, and some of the guys just started to short everything, realizing that a deleveraging event was necessary, and the biggest money that you can make in financial markets, at least in the current paradigm, is off of central bank policy error. And it was pretty clear to those investors, and increasingly clear to us in Q1, that the policy error was made by the effect of far too much liquidity that began to, because of structural issues in, say, commodity markets and energy markets, began to spill over into the real economy with CPI inflation, and the two kind of decade trend of disinflation, low CPI was reversing in a big way. So they started to raise rates, but it's not just the Fed raising rates. It was the Treasury market started to do it for the Fed, and yields started to soar. And it became clear to us that a liquidity or deleveraging event was starting to be in the works. And so structurally, the global system can't sustain periods of high interest rates with the current paradigm. It'll ultimately collapse. That's just the reality of our massive debt burdens at a fiscal level, at a federal level, at a global level, and especially emerging market currencies will collapse as the dollar continues to bid, and there's so much dollar-denominated debt out there. But I think in a Bitcoin specific sense, despite all of the deleveraging, despite all of the contagion, some pretty decent miner capitulation. I expect more, but like the third biggest public miner in the U.S. sells 80% of their stack. Like that's significant. I just don't think we've had that correlation to one kind of mass deleveraging that would basically convince the Fed to come in and actually pivot. And it's like, okay, not all analysis is based on the Fed, but we're in this dollar system where it's almost everything is one trade, and it sounds too overcomplicated, but this is basically it. It's everything's either short volatility or long volatility, and being long volatility has a huge asymmetric payoff because most every asset on the planet is short volatility. Short volatility is just your long credit expansion in a fiat system. And so I kind of believe that we're still with an global economic slowdown, with commodity prices which have come down but are still very high, and just the world economy kind of just being put into a tailspin. Real economic productivity is not down. Nominal is up. Rather, I'm sorry, twisted those words around. I still think we just need that final flush out. We've seen Bitcoin get pummeled, but it's Bitcoin is essentially a short dollar, right? And the dollar is strengthening with intensity now, and so that's why I kind of hold off in saying this is the generational bottom, even though from every metric we look at, Bitcoin is extremely undervalued and is below cost basis. All this stuff, it's a great buying opportunity. It just might get a lot better because we're seeing these macro conditions just continue to deteriorate. So that was my long-winded answer. Sorry for not being concise.
Never apologize when you're sharing your thoughts with everyone, Dylan, please. David, I present the same question to you. What effect does a broader recession in the broader economy have on Bitcoin?
Pretty much in line with Dylan. That's if you look at a broader analysis of Bitcoin as a whole, take the on-chain factors, the unwinding of the crypto contagion, correlations to crypto only. The most worrisome part is still the macro environment. A few counterparts to that, like we have major signs of the hawkish Fed, their dot plot projections are also in the 3.8%. In the 38 basis points, stuff like that. On top of that, we are seeing a huge increase in credit default swaps. So as per CDX, that rose, I think, twice in September. Also a worrisome factor. The yield curve flat, all that. Conversely, looking at gold as a leading indicator of sustained inflation, and copper on top of that as a lead on gold. We haven't noticed, gold has been flat for about 2 years. Copper just taking a downturn in the commodities market. So that gives a little bit of pause in this whole context of how, yes, the recession is coming, but you should look for peak inflation, in my view, in terms of defining a macro bottom, which includes equities and Bitcoin. Historically, equities bottom a month prior to peak inflation. So we're keeping an eye for that. There's a few signs, although inflation is of course not transitory. There's a few signs of how the now hawkish Fed and its rising rates may affect a lowering of of the macro environment in terms of inflation. So we're looking for that in terms for a recovery, but still very much wary of the macro environment.
David, you brought up something that Dylan, you actually sent a tweet out earlier today. Chris, if you could pull that up, just showing that the credit default swaps for Credit Suisse are reaching levels that we haven't seen since the great financial crisis. Can you walk us through just what does this actually mean? Like, what are these credit swaps? Why do people need to care or be concerned about this price movement?
Yeah, I mean, I'm not a bank analyst. I don't have a Bloomberg terminal. I saw it on Twitter and credited Lawrence Lepard with the chart. So I don't look at bank credit default swaps to trade Bitcoin, but I think it's more so just telling about the direction everything is going. More counterparty risk, more contagion, not just in crypto markets, but in general, more debt defaults. Like people need to understand that fiat money is created through lending. It's destroyed through debt defaults. So what's happening with the crypto exchange rates, like money, dollar denominated promises, IOUs, assets that people thought they had on their balance sheets weren't assets when other counterparties defaulted. That's kind of the story of the great financial crisis. And that's the story of just like kind of recessions in general. It's a period of credit. It's a deceleration at first. It's a deceleration of credit expansion, which, if it worsens enough and there's too much that much debt out there and enough defaults, it turns into not a deceleration of credit expansion, but a credit contraction. And that's when asset values fall, and that's when volatility increases and liquidity decreases. So, I mean, I think just if you look at a lot of the bank CDSs, they're going up to COVID 2020 highs, and that's just not a healthy sign. It's just there's trouble under the surface.
We talk a lot about volatility. Dylan, you have brought up the importance of the VIX throughout our numerous conversations. One thing that I did read over the weekend, from the only thing that I read over the weekend, was just the fact that the VIX actually is, while trading higher, still hasn't reached anywhere close to levels we saw during COVID or even during the great financial crisis. In your opinion, does this imply more volatility, which could very well be upside or downside?
I mean, I'm not an options trader for equity markets, so I'm not actively trading all this, but I think it's a really just important signal for investors to understand risk on, risk off, what a high VIX means, what it means for options pricing, what it means for just like not even just sentiment, but just like kind of the overall market liquidity. So I think VIX certainly goes higher. Whether it goes lower in the intermediate term is another story. But I'm looking at Move, which is the credit market equivalent to the VIX, U.S. Bond market volatility, and that since early spring has just been through the roof. So the most liquid markets in the world are trading like it's the COVID 2020 pandemic crash. There's some trouble, and I think that's probably indicating where the VIX is probably going in the next 6 to 9 months until some sort of reaction function from the Federal Reserve, and that's higher.
Frank, Sam, I want to give each of you the opportunity to also share or discuss just what we've been talking about here regarding the, in my opinion, impending recession, Bitcoin, and just the general volatility in the markets. Frank, we can start with you.
Yeah, I mean, this is something we talk about all the time. We were just talking about this today. I mean, it's pretty crazy to see, managers that are looking at their portfolio. It's not just crypto that's down anymore, right? Their bond portfolio is now bleeding, which is pretty crazy. And we're talking about markets that are much bigger than the crypto markets. If you look at housing, which does not look like there's any good signs ahead. Or the auto market, for example. This is trillions of dollars of paper out there that all looks to be potentially in trouble. And so from the macro perspective, I think increasing volatility should probably be expected.
Yeah, I would just add to that. I think it's all been about when I'm looking for like a Bitcoin bottom, kind of in the cycle. You can look at a lot of the on-chain cyclical indicators. You can look at a lot of price mean reversion tools and say, okay, we have these huge value. Bitcoin's way out from fundamentals here. Is it a good time to allocate? Which might be a good question in terms of what David and Frank think of like allocating now versus allocating over the long term, kind of accumulating when you see these kind of like fundamental value shifts, but also that the legacy market hasn't really necessarily put in a bottom. Dylan and I have been talking about it for a while to see something like credit spreads blow out. So obviously CDS is one way to look at that, just credit spreads of like high yield corporate debt, which is probably the most likely at risk in the Western world, or emerging market debt relative to maybe like 10-year treasury rate is also a good way to look at those blowing out, which they haven't yet, but they've been rising and accelerating. If you look at like the Goldman financial kind of tightening index or index overall for financial conditions, it essentially says like the whole system right now, although we've seen these massive moves in rates, financial conditions are still relatively pretty loose, kind of indicating that we can go a little bit further. But that rate of change in those rates, I think we've yet to see a lot of those problems play out, maybe on the earnings side of things for businesses as we're starting to have a much higher cost of capital out there as well. So, for me, there's just a lot more on the bear side of things to point to that. We're just in the beginning innings of this starting to turn over the next 6 months. And to David's point, one of the indications of like when we say, okay, when is really Bitcoin going to be that kind of turnaround asset again, or have that like high end flow of demand? It really comes down to maybe the best narrative that it's a debasement hedge. And then, you're looking at when is the period of kind of monetary and fiscal stimulus that's going to come back into the market that's kind of needed to kind of rescue the system, the loaded debt system that we've talked about over here. So I think that's really maybe more of the pivot turning point in the short term, whether that's 6 months from now, 6 months to a year, maybe that gets accelerated. But that's in my mind, maybe what I'm looking for. First, like an equities capitulation bottom in the macro environment we find ourselves in today, kind of a deeper recession playing out. And then, more of a turning point where there's no other solution other than to increase monetary and fiscal policy.
Yeah, I think just from the timing perspective, I mean, if you look at just a case study of one on-chain indicator, MVRV crossed below 1 on June 13th when Celsius paused withdrawals. And historically, outside of COVID, which was, obvious, an extreme, V-shaped recovery, MVRV crossing back above 1 has been a 5 to 10 month long process. And so you can't look at one indicator and call the bottom. Probably more likely a place you could dollar cost average, but not a place you'd want to kind of go all in on, given that there's commonly more pain ahead before it ultimately reclaims 1.
All right. I'm going to ask a question that I know everyone on this panel hates to be asked, and I will preface and tee it up saying, if you actually knew the answer to this question, none of you would be here. You would own your own island and have some sort of a crystal ball. So yes, I know that you don't know the answer to this question. Just entertain me for a moment, please. In your opinion, what would be the type of event that was going to cause the Fed to switch its stance? Dylan, we'll start with you, David, Sam, and then Frank.
Year-over-year deflation. I think they can induce a lot more pain for a lot longer. And also probably the first kind of like pivot would come in the form of some sort of kind of monetization facility for federal debt. And that's if the consumer's hurting and they want to do some form of economic aid. I don't really have a timeline for that. And that's honestly not I'm not hoping for a Fed pivot tomorrow. And honestly, I kind of have an alternative and maybe a little bit more bearish, not thesis, but just potential outcome or path that Bitcoin and the broader crypto market takes over the next couple of years. And I think it's analogous to the .com bubble, where there's, and it's obviously an example that's been told time and time again, but just if you dig into the similarities, you have this emergent thing. Our thesis is it's Bitcoin. If you want to entertain the idea that the crypto and blockchain more broadly is the big innovation here, and Bitcoin's just at the center of it, that's fine. We won't debate over semantics. Nevertheless, if you're a believer in it, in one of those two paths, the thesis is it's not going away. And so you have this explosion in interest in internet.com, stocks. Everybody knows, or at least the smartest people in the room know it's the future, but it gets, way overhyped, way too speculative, way too much fraud. Let's highlight the fact that there's a lot of the fraud occurred here had punished the exchange rate, right? Over double pledging collateral, lying about balance sheets, total assets, from Three Arrows Capital, especially. Like that's, as some people have been like, hey man, you better watch what you say on the internet. No, it's fraud. And Three Arrows has bigger fish to fry. Their legal team. But I think just, wiping away all of that, when the Fed did pivot, and the housing market was the thing that got reinflated, and tech stocks didn't V-shape bounce to infinity overnight. It was a 20-year parabolic ascent, undoubtedly. But Amazon, the survivors of the tech boom rose from the ashes. They didn't bounce right away with the Fed recovery. So I think we all understand Bitcoin's here. Bitcoin's really important. It's going to serve a factor of 100 times more importance in the future if the broader Bitcoin thesis is correct, which I believe it is. But it may not be like the COVID V-shaped recovery, straight to all-time highs, straight to 100K, straight to 500K. There's a lot of risk managers out there. There's a lot of institutions, that are watching this entire, for better or worse, lack of a better term, shit show, and saying, I'm not touching this space with a 10-foot pole. Once there's some regulatory clarity, once there's, et cetera, then I'll allocate some. And obviously that doesn't stop the pleb from buying any Bitcoin. That doesn't stop someone that's seeking monetary freedom to buy Bitcoin. But like the big capital allocators, the guys that are sitting on huge fixed income portfolios, et cetera, they're not rushing in to go buy Bitcoin at 19K. Like they're going to dip their toes in the water eventually, but it's going to take some time, and it's going to take some, more regulatory clarity. Like I'm not a big fan of regulation, but that's just the reality of the big money. And so if a Fed pivot comes, but not if, when it comes, say it's 2023, whenever that is, Bitcoin will bounce, and I think it'll bounce directly on the news, but it's, that's more of just a kind of an intraday trade or, narrative shift. I just don't think it potentially doesn't V rocket to new highs as everybody understands the end game. It's still like, there's still a lot of slow movers out there, and there's still some, some kind of recovering that needs to occur from all of this damage. Like if we're just being realistic. David, we can hear you on the YouTube, my man. I think you're muted.
Hello? Okay. Should be fine now. If you take a look at, forget about the macro, if you take a look at the cycles just of Bitcoin by itself, the bearish momentum aligning to on a 4-year basis, halving cycle, should end by end of year, which may actually match something like a Fed pivot. On that, the recovery, meaning, let's say you descend for over a year, and then you take a chop for another year, which is kind of what happened in 2014 and 15. So definitely the cyclicality of Bitcoin allows for that. As we bottom out, as the macro uncertainty clarifies and resolves, as the Fed pivots, and on top of that, as the institutional sentiment recovers on the asset, Bitcoin and crypto as a whole, whatever. So on that basis, goes back to the scenario that Frank gave. We can be below cost basis for, historically the max is about 10 months, could be longer for the first time in history, etc. Also, another thing to point out, Bitcoin CAGR on a 4-year basis, taking again just the simple halving cycle, it dropped for the first time in history this year after ranging for 6 years between, let's say, on the 130% range or so, it dropped to about the 30% range for the first time this year. So I think you should perceive as Bitcoin increases in terms of float and market cap, a diminishing return valuation, which is completely normal and expected. If you go back to the meme of a S-curve that Bitcoin would adopt, I think that's normal conditions within the range. Given the macro environment, going below all-time high extra cyclically for the first time in history is certainly uncharted territory. But still, the range between 16 and 20 could be a major consolidation, which would take the market participants, especially impatient ones, into major punishment. Now, we have major punishment in terms of price. Now we can go into major punishment in terms of time, which is typical for Bitcoin.
Sam, same question to you.
Yeah, those are all great answers. I would just add the way I see hypothetical world, don't know it, where maybe kind of Fed turns around or things changes. I think now it's obviously very political, where everything is focused on inflation for the American consumer. Elections are coming up. No one wants inflation. Fed has announced they can't do anything about food and energy, but they can try to demand destruct through a lot of different avenues. One of those being, pressure on kind of corporate margins, demand destruction through demand for labor as well. So I think probably the next thing to watch, and you mentioned a recession earlier, is kind of a technical outlook of like, are we in a recession or not? Whether we are or not, I think growth is slowing enough to be concerning. The next one, kind of with that technical definition, is kind of the rate of change in unemployment rate, which is a lagging indicator as well. So, in previously larger recessions, if we're kind of comparing this larger economic turning point, which I think we could be in that, it's always hard to tell when you look at something like 08 or 2000s or like 1975. Essentially, you have unemployment rate kind of reaching through those recessions at 7, 8, 9, 10%. So I think that's probably the next thing to give, whether you're looking for a pivot or for a change in policy, enough cause for concern, is that essentially you destruct enough wealth and you kind of try to decrease the income inequality gap as much as you can, and then kind of the next effects of that are that comes with a rising level of unemployment to follow. So if you're looking for signs of when that might change, that's probably when employment starts to get high and out of hand and becomes a bigger problem than the inflation destruction, which is probably why the Fed's tightening is so focused on inflation now, hiking rates up so they can kind of turn those over later. Yeah, and I think the duration kind of bear market cycles that David points out, it's interesting that it just kind of aligns a little bit with the economic cycle that we're in today, and pretty similar. So I know you guys put the net unrealized profit ratio or profit loss ratio in your latest report to kind of look at capitulation, and that's also when I just look at like kind of the duration of capitulation of kind of the bear market, of how long people have sat underwater in cycles before, and that can be a pretty sustained duration period. So I think we've got some time through this, as we talked about before this turns over.
Yeah, I think on the Fed, Sam nailed it. And I think it's important to remember that the Fed can pivot, and they can pivot quickly. They were planning to raise 50 points in the last meeting. CPI came out hotter than expected, and they raised 75. Consider the source. We're equity investors focused on innovation, so we want the Fed to change their tune quickly, but we think that could happen. Hard to say when, but I think you need to see inflation cool down, and then the second major thing they're looking at, kind of as a confirmation of that, being the labor market, seeing them basically, the indicators at least saying they've controlled inflation and the labor market's cooling off. They can kind of declare victory and kind of cool their hawkish tone. What they've been doing now, we would say, is a bit of job owning, kind of trying to really seem overly hawkish. So once those indicators turn, they can then back off. They basically get the reaction without having to raise as high as they may be indicating right now.
I guess we're all going to have to just sit back and wait as these inflation numbers come in, as the Q2 GDP numbers get reported, to just see sort of how the Fed is going to have to respond to these numbers. They will know it maybe days before we'll know it, but time will tell. David, Frank, I want to give you two the opportunity now to discuss the thread of your guys' most recent report. We've talked a little bit during this segment about the generational buying opportunity that historically has presented itself in this present Bitcoin environment. I want to start first with the very first tweet in that thread about the 200-week moving average. This has been a technical indicator that many traders use for Bitcoin. This, as you can see in the chart for everyone who is joining us on YouTube, we are at a level now that historically has marked a generational buying opportunity. I'm curious for the two of you how you guys in Ark are treating and viewing this moment in time.
I can jump in. Yeah, so one thing to consider, as I mentioned, Bitcoin's CAGR is descending, right, by almost 100 percentage points. So that makes the 200-week moving average as a mean reversion mechanism not as reliable. I would stick more to the on-chain cost basis that we see on the chart here. What you're looking at is pretty much the gray bars is the confluence of price going below the 200-week moving average and the general cost basis of the market or realized price, and the long-term holder, short-term holder cost basis of the market. So pretty much on average, every market participant is at a loss at current time. But given the contagion effects in the crypto market and the macro conditions as a whole, this should be seen, in our opinion, as a wide range of accumulation as the macro uncertainty and the crypto contagion unfolds and resolves. If we want to go into the few other charts, I think Frank can cover the Celsius 3 arrows, and I can cover on-chain.
I want to, before Frank, sorry to cut you off, actually pop over to tweet number 6, the Puell multiple, and have you, David, kind of explain what this is and what this is now showing everyone.
Sure. So Puell multiple, a metric I invented a few years ago. It's simply the miner revenue in USD terms on the day divided by the yearly average, the 365-day moving average of the same miner revenue, USD. It basically measures the earnings compression of miners at any given time, which usually correlates whenever miners in aggregate have a compression of 45%, their yearly average, it usually signals both. It could be a predictor of capitulation by this market cohort, and at the same time a gauge in undervaluation for Bitcoin as a whole. So right now it activated the 45% signal, and I think it touched 39% or so. But still, another mean reversion mechanism that could still go lower, as we've seen in the chart itself. This is just balancing out what we're seeing in hash ribbons and other metrics specifically related to miners, hash ribbons, miner outflows, and just news events in the ecosystem right now on how just as every cycle, smaller or weaker miners are getting left out of the ecosystem, and new, stronger miners are emerging and capturing that arbitrage.
Thank you for that. I mean, we've been seeing a lot of reports. Dylan and Sam put out a most recent report talking about the miner capitulation. Excuse me. And some miners are selling Core Scientific, you assholes. No longer a shareholder of that stock, but yep. I'm just going to leave it at that, to say the least. Frank, I do want to give you the opportunity to touch on some of the reporting on the counterparty risk. Specifically, I want to go to tweet number 4, where you actually listed some of the 3 Arrow Capital counterparties, and lo and behold, at the top left, we see Voyager. At the top right, we see BlockFi. Talk to us a little bit about how this web is intertwined and what maybe your expectations are in the coming weeks and months.
Yeah, I mean, this is kind of going back to where we started the conversation, but Su Zhu and Kyle Davies had a great reputation in the crypto space. They were seen as thought leaders, and they had great performance for a long time. But it looks like they used that reputation to get sweetheart deals and these uncollateralized lending from pretty much everybody in the industry, or at least we're taking loans from everybody in the industry, and that's kind of totally blown up on them. We're learning more every day who is affected. Their margin trading accounts on FTX, Deribit, BitMEX, for example. Genesis and BlockFi have been public about liquidating their collateralized positions, and we know Voyager was a major uncollateralized position. I'm sure there's more that we're going to find out as they go through the bankruptcy process. And you can see just from their portfolio investments, I mean, they were kind of all over the map, from liquid tokens, layer ones, equity of crypto native companies. It really is a massive event. And I think something we've talked about as well is that gives us some confidence is as we kind of learn new findings from this contagion event, each seems to be relatively smaller in magnitude, as in the next shoe to drop seems to be quieter than the last, which gives us a sense that they're kind of winding down in terms of total contagion that could be yet to see. But we're kind of monitoring that closely. I think it's also kind of would love to just discuss this report in general that we're putting out now. This is the second monthly report. This is something that we've been working towards for over a year, as we've kind of built up more and more research knowledge and a team around on-chain analytics, and something that really is unique and possible in crypto that's not possible in the traditional equity markets, given the transparency of the base layer, to be able to put out a report like this that goes down and creates a market commentary that incorporates both on-chain and macro, that is relatable to your crypto investor, savvy or not, and traditional investors as well, hopefully, is what we're targeting. Really taking crypto market commentary to the next level. Something that I'm used to reading quarterly reports for the companies I cover in the equity space, and this is just just a totally different ballgame. So we're super happy to be putting these out now, and love to look forward to engage more community response from it.
Looking forward to those and many more reports. David, Frank, I want to give you the opportunity to make any final or closing remarks.
From my end, I mean, that pretty much sums up what I would have said, but just in general, I think one thing that's also comforting about the crypto space is that, well, you see players operating around the crypto networks, be it Celsius or Three Arrows, kind of getting over their skis and blowing up. They've done nothing to harm the fundamentals of the underlying network, and Bitcoin itself is a neutral platform and a neutral technology that everybody can use. Some can misuse it, but it survives. So in the long run, I think the future is bright for this space, despite what we're all seeing today.
Yeah, am I on live stream as well?
Yep, you're good. David, sorry to interrupt you. You're muted on the restream link.
Yeah, that's what I thought. It keeps on muting and muting weirdly. So if you can unmute me, so I can.
I think you're good now.
Okay, perfect. Yeah, so I was just talking about two major lessons for the cycle. One, one was the major divergence in terms of transparency between Bitcoin and the whole crypto ecosystem and centralized platforms. I think you saw that very much between the leverage we could find from Celsius and Three Arrows on the DeFi protocols versus their counterparties in centralized lending entities. I think that's the first lesson on how, yes, it may not make things unwind faster, which if you look at it on a long-term basis could be healthier, but it holds up one of the major value propositions of Bitcoin, OnChain Analysis, and to its credit, DeFi as a whole. I think that's a sign of things to come into how proof of reserves and just overall transparency of how markets are dealt with will shift into more transparent mechanisms, meaning decentralized as opposed to centralized. Conversely, the other lesson, which was, I guess, a bit sadder, was the unrelenting correlation between equities and Bitcoin. I think is one of the major tests for the asset as a whole, meaning surviving a deeply hawkish Fed, possibly its most uncertain macro environment and context as a whole. I think surviving that will be major for the asset, especially as investors, institutional or not, start allocating according to actual fundamental value. And this includes equities versus Bitcoin, Bitcoin versus Ethereum or any other cryptocurrency, etc. But still very high conviction in the space as we see how things resolve.
I want to be respectful of both of your time. I know you have another meeting coming up, and say thank you both for coming on and joining us, sharing your work and perspective, and doing the work that you guys do. Thank you both, David and Frank, for joining us. Dylan, Sam, I let you do what you need to do best and tell everyone about BM Pro, the work that you guys are doing. And just as a reminder, their monthly report has been made public for everyone. They went deep down the rabbit hole of contagion. So be sure, if you have not yet already checked out the monthly report, which was made public last Friday, we have pinned it to the top of the spaces. So be sure to pop on over and give that a read. But Dylan, Sam, I let you guys now talk about what you do best.
Yeah, we just kind of, a lot of the stuff we talked about today, we cover in our daily newsletter called Bitcoin Magazine Pro. Cover just really anything that's relating to the Bitcoin market. So macro, the transparency of on-chain data, Bitcoin derivatives, the recent kind of contagion stuff. We like to cover it all. I guess I'll just end, and then I'll hand it off to Sam. But personally, we'll end this with saying that, hopefully at the other side of all this, like this Bitcoin bear market, some lessons are learned in terms of the kind of promises and the illusion of Bitcoin native yield, and actually using what's really a fantastic innovation in a transparent set of property rights, immutable property rights in the Bitcoin network, the Bitcoin blockchain, and using it to actually do what it does best, and that's kind of insulate yourself from counterparty risk. At a retail level, like with using these yield platforms, but also an institutional level, the thing that caught me off guard at first was in terms of like just how severe and quick this bear market was, just admittedly, was the amount of unsecured credit and debt and off balance sheet IOUs in this space. I understood there was a large amount of collateralized debt with high LTV ratios. So relatively safe, but that was always a risk. But the off-balance sheet stuff was something that I didn't expect when you have crypto markets that trade 24/7, 365, where you can over-collateralize to compensate for volatility. So I think, hopefully on the other end of this, lessons are learned, a little bit cynical on that. And I kind of believe that we'll replay a lot of this stuff next cycle at a bigger magnitude. but maybe not as big in relative terms. But that's just, I guess, my 2 cents and sign off.
Yeah, I'll just add to Dylan's point. If you're interested in this content, whether by like audio or writing, sign up for a free subscription at bitcoinmagazinepro.com. Today, we're releasing something on interest rates, commodities, macro environment, charts data. That's all going along with that. But yeah, to Dylan's point, we have a very long-term Bitcoin thesis and view that hasn't really changed and is really based on a lot of the fundamentals that we talked about before. That's kind of separate from where macro's gone over the last 2 years. So check it out. Thanks for having us. Appreciate the time, Q.
Thank you both for joining us. It's been an absolute pleasure as always. If you are not subscribed to Bitcoin Magazine Pro, do it. We're going to cut to a commercial break, and we're going to be joined by Seed Signer to talk about self-custody. So if you are not following along on YouTube, all you Twitter Spaces people, feel free to hop on over, and we're going to be talking a lot about self-custody because with all these contagions, not your keys, not your coins. All right. We'll be back after this commercial break.
You are listening to Bitcoin Magazine Live. Listening to Bitcoin Magazine Live. Number one Bitcoin Magazine Live. You are listening to Bitcoin Magazine Live. Listening to Bitcoin Magazine Live. Number one Bitcoin Magazine Live. Stand by.
What is up? Welcome back, and thank you all for sticking through that commercial break. P, do you want to introduce our guest for today?
Absolutely. Can you guys hear me okay?
Yes.
Amazing. Okay. I'm super excited for this conversation. We have an incredible guest today, Seed Signer, who is the creator of one of the most interesting hardware devices for holding your own private keys in Bitcoin that I've seen so far. Seed Signer, you sort of debuted yourself at the Bitcoin 2021 conference, but you've been in Bitcoin since what, 2013? And yeah, we're so excited to have you. How's it going?
Hey, thanks for having me, guys. I'm excited for this. So, to answer your question very quietly, since 2013, it wasn't until I guess 2020 or 2021, I guess it was, I was a more public Bitcoiner. I was just busy with other things, and Bitcoin was something I was. It took me a while to get down the rabbit hole and to sort my mind out, I guess you'd say. I don't know. I call my Bitcoin life as something that developed in two acts. And in the first act, it was an investment. And the second act, it took on a much deeper meaning in terms of, checking the power of governments to create money at will. But we can get more into that. But yeah, been kind of like lurking in the space for a while.
Yeah, yeah. And I was so excited to have you as a speaker, as an onstage speaker at Bitcoin 2022. I appreciate you being willing to take the stage.
It was a lot of people who may not follow the project. I originally was a NIM. Obviously, when I appeared at the 2021 conference, it was on the open source stage, so it was a much kind of like smaller, quieter venue. And I I'm a little bit of a LARP, I guess, when it comes to the NIM thing. But as opportunities have presented themselves to speak more publicly about the project, I don't put my name out there, but obviously here I am, appearing with you guys. So
Those
it's
glasses
been
are
a
dope,
developing adventure. Thank you. They're frugally obtained.
though. So let's talk about what Seed Signer is and why it is so powerful. Can you take us through? There's an amazing Bitcoin Magazine article that you wrote recently with Keith Mackay and Fadi, who were also at Bitcoin 2022, and you did an amazing job. So I would encourage all of our listeners to go and read that article if you have not already. But Seed Center, can you sort of take us through what the progression of sort of a hot wallet, and what the pros and cons are there, and then, moving to a hardware wallet and the problem that Seed Signer really resolves or aims to resolve?
Sure. Seed Signer was kind of an outgrowth of my background in digital forensics. I was a police officer for 15 years, and for the great majority of my career, I worked in a digital forensic lab. So I was working at a pretty technical level with phones and computers, hard drives, data storage, media, that sort of thing. And as I started to look for a new way to custody my own Bitcoin throughout 2020 and into 2021, um, I came across some projects that were super interesting to me. One was Spectre Desktop, and the other was Spectre DIY. And multi-sig is something that had been around before 2020, but it was one of those technologies that begins, of course, at a very deep technological level, and it's not accessible to the average Bitcoin user. But Spectre Desktop was one of these tools that was one of the first on the scene to take multi-sig and start to make it doable and approachable for someone who is more of your average Bitcoiner. So as I was looking to create a better way to custody my own personal Bitcoin, I was kind of pulling some facets of my own background in digital forensics and kind of on the coattails of Spectre's DIY wallet, which is actually functionally pretty similar to Seed Signer, but it predates our project. But it was a revelation to me, and a couple of the technologies that are baked into that I found really compelling were, one, this use of QR codes and animated QR codes is a very constrained way of communicating between your coordinator software, which is what sets up your multi-sig and which is what interacts with the protocol. And then, of course, the device that interacts with your private keys that is on a separate device that does not have access to the internet. So the opportunities for that device to be compromised or to somehow leak your keys are extremely limited by this QR exchange process. And then another concept I'll bring up is statelessness. Seed Signer as well as Spectre DIY are considered stateless, which is just a fancy computer science term for they either don't remember anything once you power the device off, or they don't remember specific kinds of data once you power the device off. So with Seed Signer, to jump back to your original question, in terms of the article that Keith and Fadi and I co-wrote for Bitcoin Magazine, these unique properties of statelessness and the air gap QRs address some challenges that are unique to areas like El Salvador, parts of Africa, what some people would have referred to as developing economies, these places where people are adopting Bitcoin as potentially a savings mechanism to escape the inflation from their local currency or even the dollar these days. So statelessness first breaks the correlation, the one-to-one correlation that almost all kind of modern hardware wallets rely on between a private key and a physical device. So the model that's used by Trezor and Ledger and Cold Card to a great degree and Bitbox, all the hardware wallets, is for every private key that you want to manage, usually you need one hardware device that you'll use to manage that. For developing economies, that's less practical,
Yeah.
because these hardware devices cost money, and people are just beginning their savings journey, and they may not have the funds to set aside for one of these devices. So a stateless device that when you input your private key into it, it does not remember your private key that you entered into it when you powered off. So what that unlocks is it breaks this one-to-one correlation between private keys and devices, such that a single signing device, and that's what I've always kind of referred to Seed Signer as, not a wallet, but a signing device, because it creates signatures for Bitcoin transactions.
Yep.
This device can be used by trusted third parties. There are a lot of multi-generational households in places like El Salvador. And so with trusted third parties, friends, relatives, and such, they can all use a single device to potentially manage not just their own single sig wallets, but it also opens up the possibility of multi-sig wallets, which in my belief is like, first class independent
Absolutely.
sovereign Bitcoin custody.
Yep.
And then before I start to ramble on too much, there's statelessness, and then this air gap QR exchange process that I referenced. The neat thing about that is that it makes Seed Signer compatible with virtually any mobile phone or any computer just out of the box, as long as the device has a camera and a screen. So a lot of people in El Salvador may not have access to a desktop computer or a laptop computer. Their primary way of interacting with Bitcoin and the internet is through a mobile phone. And while it's possible to interact with a hardware wallet and a mobile phone, usually it requires either you're moving an SD card back and forth, or you need some kind of an adapter to connect the wallet to the phone. Again, the cool thing about this air gap QR exchange is the two devices just use their screen and their camera to interact with one another. So right out of the box, something like Seed Signer is compatible with virtually any smartphone.
Yeah, and I just want to go back for a second and kind of step people through the various terms that you talked about, right? So if you are, new to Bitcoin, your one's private keys are what actually control the movement of the Bitcoin that you own. And so you have like a 12 or 24 seed word phrase, which then can be used to derive your private keys. And they're the sort of like the least secure option is what some people do is like they keep their Bitcoin on an exchange, right? So you've heard about all these sort of blowups recently, Celsius, now Voyager, 3 Hours Capital. And if you had your Bitcoin on Celsius or on Voyager, you now have lost the ability to withdraw it, which is crazy, right? Because Bitcoin is about radical, or it's about many things, but one of the things is radical, personal self-sovereignty as it relates to your finances. And if you don't take control of your own keys, then all you really actually have is an IOU, right? You're trusting Voyager or Celsius or whichever other exchange, you may foolishly be storing your Bitcoin on to make you whole when you ask them for your Bitcoin, but you don't actually own it. But Bitcoin, one of the amazing things about Bitcoin is that you can actually take full control of your Bitcoin, and no one else can do anything about that or to stop you if you hold your own private keys. And so, there's a whole host of ways of doing that. Sort of the next step would be like what's called a hot wallet, which would be like a blue wallet or a moon wallet. That's MUUN, which you have on your cell phone. And then you are in control of your private keys, but really one shouldn't hold any more in a hot wallet than they feel comfortable, carrying around in a physical wallet, right? So however much value you'd feel comfortable sort of literally having in your wallet, that's probably a good amount to have in a hot wallet, which is again a wallet that is a signing device that is connected directly to the internet. What we're talking about now are hardware devices, which are purpose-built computers that basically that securely store that private key so that you can sign Bitcoin transactions. So when you want to send Bitcoin from one address to another or pay someone, you have to sign that transaction. And so, there's a lot of devices out there. Some of the great ones we talked about a lot on the show, like Cold Card, Spectre DIY, here's like, Bitbox, so too. None of these are sponsors or anything. These are just devices that I like and I use. And then, of course, Seed Signer. And as it's going to get confusing because we're talking about the seed signer device and then also you as an individual seed signer. And as seed signer, the person was saying a second ago, one of the things that's so cool and so exciting to me about this device is that it really democratizes this thing that's so important, which is having a way to securely control your own keys. So one of the problems with all these, with many hardware wallets is that they're rather expensive. It's $100 or more than $100 to be able to have this purpose-built device that lets you store your own private keys. And Seed Signer really has done an amazing thing, which is not only is the hardware, not only is it relatively inexpensive, but it, as you were saying, Seed Signer, you're not storing those keys on the device. And so it really allows people in other places, in other countries who maybe can't afford some of these, some of these more expensive hardware wallets to take control of their own keys in a really powerful way.
Yeah, I appreciate the additional context you provide there. Yeah, and one other aspect of our project that I didn't mention is that it is a do-it-yourself device or something that you can assemble from off-the-shelf components that you either buy through a local retailer or some of them are a little bit harder to find and have to be purchased on the internet. We've been hit particularly hard by the Pi shortages that I'm sure everybody's aware of. Maybe even more so from building nodes. A lot of people will use these kind of flagship versions of the Raspberry Pi to build nodes, and we're built off of a smaller form factor version of the Raspberry Pi called the Zero, which has been particularly hit hard by some of these supply chain issues. But people are still out there finding them and still building Seed Signer. I think it's ended up being a real testament to the kind of the value of our project and what it offers, and how excited some people are to build one, and then once they use one, how much it clicks with them. Like people are coming up with some creative ways to source Raspberry Pi 1.3s, as well as take some of the other Pi Zero models and remove the wireless functionality so that they can build a Seed Signer and have that same degree of assurance that that wireless communication isn't even possible, that there's a secure air gap in place. But we can talk more about it, but we're starting to look beyond the Raspberry Pi ecosystem, and Raspberry Pi as a platform will obviously continue to support it, but we'd like to branch out to other microcontrollers as well, so that in light of these supply chain issues, people who want a Seed Signer can build it with something that they can readily get their hands on.
Yeah, absolutely.
But yeah,
and just to define some of the terms, for the viewers again, when with a hardware device, you can plug them directly into your computer, but ideally you're using a hardware device that is, as you said, Seed Signer is air gapped. So maybe can you define what the term air gapped means and why it's valuable in this context?
And even before I do that, let me just kind of explain, I guess, in terms of Bitcoin primitives. Obviously, like you mentioned, there are private keys, and people have what is technically referred to as a master private key, which is their seed words. And with those 12 or 24 words, you can rebuild your entire Bitcoin savings with just possession of those words. So those are the secrets that protect your Bitcoin, but those secrets aren't useful unless you have kind of the other side of your Bitcoin stack, which we'll call it the hot side of the Bitcoin stack. And all hot means is that it consists of devices that are connected to the internet that are designed to interact with the Bitcoin protocol. Because what use are your private keys if you don't have that connection to the internet protocol to be able to deposit coins and, of course, spend your coins? So what this concept of an air gap does is we have some devices that are intended to interact with our private keys, and then some devices that are interacting with the Bitcoin protocol. And this air gap ensures that there's no intermingling between those two devices that occurs outside of a very controlled way that users get to meticulously interact. And what this all kind of arose out of was my background in digital forensics, and hardware wallets were a huge leap forward for the industry, because when I first started paying attention to Bitcoin, it was either a hot wallet that was Bitcoin Core on your computer, and maybe you would encrypt your backup, but it's still the functional equivalent of a hot wallet. Or there were some early experimentations with paper wallets and ways of creating private keys offline and storing private keys offline. But hardware wallets they represented a huge leap forward in terms of security.
Oh, absolutely. I just want to
And the
I mean,
yeah,
back
yeah.
with paper wallets, it used to be the case, like early Bitcoin days, that it was like, okay, first you have to take a laptop and then remove the Wi-Fi card. Then you use that laptop to generate these your private keys. Then you print out your private keys on a printer, which you have disabled the wireless card on as well. Then you destroy that printer, and then you kill everyone who ever saw that. It's like, it was crazy.
Right. There were some extreme lengths that we all had to go through to have some peace of mind in terms of our private keys being kept private. And hardware wallets, they introduced some trade-offs, but by and large, they were a huge leap forward, because they're these specialized devices that have very specific characteristics in play that ensure that even though you're connecting it to a device that talks to the internet via USB usually, your keys are stored in what's sometimes referred to as a secure enclave, or there's some other technologies that reference that. But your keys are kept in a very kind of special data space that ensures that it's really difficult to get to them. So that offered a leap forward in terms of assurances of being able to still access your Bitcoin in a relatively convenient way, and have the assurances that it was on this device that had some mechanisms in place that kept it separate. But with my background in digital forensics, one of the things that we do is we acquire data sometimes from thumb drives, from hard drives. And in the digital forensics process, that's always something that we pay very careful attention to when you connect one device to another to extract data, because a lot of people don't realize it, but there's actually some things going on under the hood that people don't realize when you connect one USB device to another USB device, to a thumb drive, to a computer, we'll say. And hardware wallets do a great job of mitigating most of those issues, but still in the back of your brain, maybe in your lizard brain, you're thinking, I'm connecting this hardware wallet to a hot device, something that connects to the internet and the Bitcoin protocol, and that never sat well with me. And when I discovered Spectre DIY, that instead of using USB or even a micro SD card to move transaction information from the hot part of your Bitcoin setup to the cold part of your Bitcoin setup, it always that USB connection always just made me a little bit uncomfortable. So the air gap QRs represent, for me, this very elegant solution of moving that data back and forth.
Can you reiterate why it's important to not have your device connected to the internet? Like, what are the attack vectors that someone could possibly use to get access to your keys if you have a device that connects directly to a device that connects to the internet?
Right, and this is a somewhat tinfoil hat way of saying it, but when you connect that device via USB, if you can update the firmware via that USB connection, there are a whole host of possibilities that come into play. The nightmare scenario is that you download some sort of malware infested firmware that, frankly, for Seed Signer and all devices, if you download, malicious software, it potentially is going to do malicious things. But I think that's what you're alluding to, that that USB connection is just kind of, you can't see if there is activity happening on it when it's connected. Obviously, human beings don't have X-ray vision. We can't see into that USB connection. So what Seed Signer does, as well as Spectre DIY, and I'll give a shout out to Foundation's Passport, as well as Keystone, and there's another open source project called Crux. All of these projects that leverage this air gap QR exchange process, it gives users of those devices a very definitive sense of when information is being communicated from your internet connected device, which is what we call your coordinator. So that's something like Sparrow or Spectre Desktop if you're using a laptop, or something like Blue Wallet, or even Nunchuck if you're using a mobile phone. It gives you very definitive assurances in terms of when is the coordinator that's connected to the internet communicating to my signing device, which is air gapped and offline. And then if you really wanted to, you could audit those communications to see what's in the content of those QR codes. Auditing a USB connection, especially for the average users, is a much more there's a much higher bar with that. And if you suspect that there's something malicious happening, or you're just not comfortable with the workflow for whatever reason, you suspect that there's something weird going on with your coordinator, it's very simple to terminate that connection immediately. So you can, pull your camera away from the device, or pull your screen away from your laptop. But what that QR exchange does is it takes the communication that's happening between your coordinator, your laptop, and your phone, and your signing device, which again is offline, and it lets that happen only one way at a time, and in such a way that you can be much more comfortable about at what point of the transaction process are we, what's happening right now. And that's another kind of batch of feedback that I consistently get about Seed Signer, is because of the way that we break down the process of creating a private key and then deriving a public key from your private key, so you can set up a wallet, and then the kind of hands-on, more manual process of conducting a spend between the two devices. It helps people understand Bitcoin primitives and how they work, and why you need to keep your private keys private, why your extended public key is something that, yes, that's what you need, and it's okay to communicate that to something that talks to the internet, but it's also a potential privacy leak too, because if someone obtains that extended public key, they can potentially surveil your transactions. Yeah. And then the process of, I'm going to lapse into some technical terms here, but a partially signed Bitcoin transaction, which people who are less technical in Bitcoin, a PSBT, that's just, you can just think of it as a rough draft for a Bitcoin transaction. That's kind of like writing a check. It specifies the amount that's going to be spent. It specifies the recipient. It says, it's not on a check, but what kind of fee are we including with that transaction? Your Bitcoin account number. So where's that money coming from? That partially signed Bitcoin transaction is the format by which Seed Signer communicates with something like Sparrow or something like Blue Wallet. And that's, the mechanism that we use to, you first draft the transaction on your internet connected device, and then you pass that drafted transaction to your signing device, where you can use a separate device, a separate code base, to kind of independently audit what's in that proposed transaction, because that transaction contains the fundamental information that is going to get broadcast to the Bitcoin blockchain. So you're looking kind of at the real deal. And on your Seed Signer, your Spectre DIY, or whatever device you're using, even with hardware wallets, you independently verify, okay, how much am I spending? What's coming back in unspent outputs? What kind of fee? What address externally is this going to? Yep. And if all that looks okay, what Seed Signer does is it doesn't add your private key to that partially signed Bitcoin transaction. It just includes cryptographic proof that you have the key to spend the money, and then incorporates that proof into the what we call a PSBT, or the rough draft transaction. And then the transaction is passed back. Now it includes proof of the signatures. It's passed back to the device that communicates to the Bitcoin network, where again, that's the final step, is broadcasting it to be included in a block. But it's so difficult to break down this stuff. But what Seed Signer does that's great is it forces users to walk through this step-by-step process of, okay, I'm importing a private key. When I'm setting up a wallet, I'm communicating a public version of that private key to my coordinator software. And then when you want to spend, we have to move that draft of a transaction from the internet connected side to your air-gapped offline side, and then back once you've approved it. So it's difficult to illustrate without visual aids, but talking through it hopefully clicks with some people.
Yeah, and I want to sort of do a brief summary just for the people that are listening, right? So again, really the impetus for this conversation, and it's something that, if you're in Bitcoin, we talk about a lot, is taking control of your own private keys, taking responsibility for your Bitcoin. And, with everything that's going on in the news, Celsius blowing up, Voyager, all this stuff, it becomes even more important. And so you can, it's a spectrum, right? You don't have to move all the way to, a multi-sig setup with, seed signer and a cold card or multiple seed signers. Every step that you can take is an improvement. The other thing that I want to say as we're talking about this and going through it is it's critically important that you as an individual are comfortable with these steps as you are going through them. So please don't hear us talking about, the importance of taking control of your own private keys, not your keys, not your coin, get your money off an exchange, and then go do it without actually understanding what you're doing and being ready for it, because you can lose access to your Bitcoin and that would be fucking terrible. So there's just an incredible plethora of amazing guides that will walk you through the process of taking control of your keys. Go review those guides, understand them, and then, make a test transaction, play around with it, wipe your device, restore your device, use a seed signer. There's all these different things, but go through those steps and make sure you understand it before you just, dive headlong in. Because I know this is a technical conversation and I want to make sure that people sort of hear that brief PSA. But again, we're talking about moving from an exchange where one might purchase Bitcoin to sort of best-in-class security setup, and how one can do that with a device like Seed Signer. And to sort of reiterate what some of the stuff that Seed Signer said, you basically generate a transaction, which is sort of in this draft state. It's called a PSBT, a partially signed Bitcoin transaction, and that's a standard that many different devices and pieces of desktop coordinator software support. So once you've generated that transaction, then you need to take that data and then move it to a device that can sign those transactions for you. And so Seed Signer uses a really cool, it has like a camera on it, and that data then gets sort of represented as a QR code. You can scan the QR code. Seed Signer will then sign the transaction for you, and then it'll generate its own QR code, and then you can scan that QR code with the coordinator software that you use as it's being, after it's signed by the Seed Signer, and then you can go from there. So that's kind of what we're talking about. Would you add anything to that?
Can I rip off that for a sec?
Yes, please.
What's the end goal of all of this? The end goal is for people to be comfortable with their Bitcoin setup. That is like my whole journey with Seed Signer was just my own personal journey with my unique background in becoming comfortable with my security setup. We talked a little bit about my backstory, and I never like to admit this, but I sold all of my Bitcoin in 2017, early in 2017. I don't want to represent that I have any sort of great trading or investment timing. But part of the reason that I sold all of the Bitcoin that I accumulated up to that date, a big part of it was I was just not comfortable with my security setup. And I had basically a rough equivalent of what we talked before with paper wallets. I had a piece of paper with public and private key pairs that I created in a very secure fashion. But as Bitcoin grows and as the NGU technology kicks in, a lot of people like myself who just kind of have a very blue collar background were not accustomed to the type of financial gains that Bitcoin represented at that point. And I hadn't done a good job of updating my security setup to account for the amount of value that I was trying to safeguard. And it was starting to cause me more, anxiousness and nervousness. And then with a lot of people, that's the first step of just like, well, maybe I'll move my coins on an exchange and leave them there for a period of time while I get my next security set up. Or, it's just, you start to question over time whether the financial gains that are typically achieved with Bitcoin over a multi-year period, you start to question, are those real? And having a better security setup that you're comfortable with and that you can periodically do a sanity check, or as you alluded, that's upgradable over time. So a lot of people are hesitant to upgrade their Bitcoin security setup because they feel like maybe they don't have the knowledge or the skills to get to what they kind of think or have been told is the ideal security setup. And that ideal security setup is still a moving target, even for, even for people that are deep into it deep into it like me in terms of the weeds with the details and stuff. So I want to encourage people not to be put off by, don't think it has to be perfect. It's just something you have to be comfortable with, and that should be an improvement over your current setup. So for some people that have their Bitcoin, frighteningly enough on Coinbase or something like that, it's moving your Bitcoin from a custodial wallet to a hot wallet, maybe that you custody on your phone. Now, if you're safeguarding a substantial amount of Bitcoin, that's probably not the best place to end. But then the next stop after moving into a hot wallet is moving to a hardware wallet or some sort of offline wallet. And then after that, maybe you start experimenting with something with an air gap, or maybe after that, you want to get into multi-sig and start playing around with multi-sig. But I just want to emphasize to anybody who's watching this that it's a process, and it doesn't have to be the perfect best thing, right off the bat. Definitely practice and be comfortable with what you're doing. Do the research, read the guides. We have some great informational resources at seedsigner.com, but make security a journey. It's the Bitcoin space is still writing the best practices for security, and it's getting better and better, but don't get left behind. Be comfortable with how you're storing your coin. And if it's okay, I'll also just hold up. I usually don't have one with me, but I happen to have a seed signer with me today for people who have never seen one or may not be familiar with the hardware profile. As you can see, it's difficult with this particular one because it has a black cover plate, but there's kind of a thumbstick over here, and then there's a few buttons over here. So it looks like kind of a little micro video game system with a screen in the middle. But we have a very slick UI. And then as you referenced before, this screen is where the QR codes are displayed. That's how we move the information between your coordinator software and then the seed signer. And we have a camera that's integrated in the back, micro SD slot, which is where you load the software for seed signer. But this is what it looks like for people who, haven't seen one in real life. And yeah.
I love it, man.
I just want to chime in really, really quickly because you two far more technically advanced in understanding Bitcoin, self-custody, privacy, and security versus someone like me. And I have no shame in literally DMing P or reaching out to P or Chris, or even shout out our former co-host Alex McShane to help me, because this is not an area where I understand. And I think there needs to be a little bit of humility with some of you who need to learn this stuff and reach out to your friends, or, there's a lot of great resources all over YouTube from our channel as well as other channels on how to do this. And don't be afraid to ask the right people. Don't just post on Twitter, hey, I need to set something up, someone help me, because you're just exposing yourself. Reach out to friends. That's just my 2 cents. I'm going to go back to just purely listening to this conversation.
No, I think that's such a great thing to reiterate, that we have all been there, right? This is complicated stuff. And I mean, like I said, when I was first setting up my, hardware wallet years ago, I generated it. I was like, oh my God, what does this even mean? I wiped it. I, restored it. I sent a transaction back. We've all been there. And, yeah, feel free, really reach out to people that are around you. There's a great guide specifically about how to set up Seed Signer on the Bitcoin Magazine website. If you just go and you search Seed Signer, it's one of the ones that'll come up, and it goes into extreme detail. If you want to read that or follow along, so you kind of get some of the terms that we're talking about, go do that. But there's a lot of options out there, and yeah, reach out to trusted sources and ask for help.
And I would also throw out there too, there are some great services. OnChain and Casa are the two that probably are the most prominent that people are familiar with. Sometimes we as Bitcoiners think that we have to, do everything ourselves and we have to be the expert on everything. But OnChain and Casa provide a super valuable service to a lot of Bitcoiners that might be able to do it on their own, but maybe they just like that additional little bit of confidence of having another company that's their bread and butter. That's what they specialize in do, is helping people with custody solutions. Another advantage of those services is that they will hold a recovery key for you. So they are kind of native multisig by default. So another advantage of using those services, and there's nothing wrong with it, is having a third party that holds a recovery key for you, that if you have some sort of issue with the keys that you're holding, obviously they can't access your Bitcoin with their one key, but they can be that resource when you have questions, or you're in a situation where you think you might have messed something up or something's not making sense. It's always great to have that resource, and they're two great resources for people who are looking to upgrade their custody setup.
Love it. Fantastic.
Can I present a question to the two of you? Because I don't know how many people caught this, but it turns out that June was the highest month ever recorded of coins leaving exchanges to go on to cold storage. So firstly, I just want to give both P and myself a round of applause for pounding that drum. It's very, very obviously because of us and only us. No one else in this space told you to take your keys or coins off of exchanges. But the truth is, like, there is still the potential for this inevitable bank run. Seed Signer, could you maybe just share your thoughts on what that might look like? Of what does it look like if everyone all at the same time tried to go on? I'm just going to use the worst of the worst, Coinbase, because that's where a lot of people who don't have the best practice are unfortunately buying and holding their Bitcoin. What happens if everyone decides to go onto Coinbase and withdraw at the same time?
That is honestly an unknown. Hopefully Coinbase has, the coins in cold storage and the liquidity necessary if that happens. But I mean, that's what they call in the old days a run on the bank. And that's when you find out, like, are your deposits truly secure, or are you maybe just holding an IOU for the Bitcoin that you, in good faith, stored with that custodian? Yeah.
Hopefully what they say is true, I guess. Time will tell. Okay, back to
Right.
our regularly scheduled program.
But I would also that's a good, like, part of the question is why independent custody? Why custody your own coins? And there's that's one of my favorite reasons, is it takes away some of the potential for some of these custodial platforms and centralized platforms to engage in we'll call them shenanigans that they can, when they're a custodian, in terms of rehypothecating or playing with leverage that is to a dangerous degree. So one reason to hold your own coins is just to try and restrict the ability of these platforms to rehypothecate coins, which is kind of a way of stealing value from the Bitcoin network. If people can, create platforms that, through leverage or rehypothecation, give certain financial actors access to the price of Bitcoin without the underlying asset actually being held to represent that exposure to the price, that's kind of a covert way of stealing value from the network and kind of subverting the power that is Bitcoin. So it helps put an end to that kind of stuff. But other reasons why you want to custody your own coins is, you don't fall victim to these kind of rug pulls, or, like you kind of alluded, what if the platform you're on doesn't have your coins? You kind of ensure that you don't fall victim to that kind of thing. But, as time goes on, for more advanced sort of reasons, holding your own coins is foundational to using Bitcoin in a more privacy centric way as well. It's the first step. If you want to use any of these collaborative transacting kind of services, getting your coins off the exchange and holding your own keys is the first step to that.
Well, P's muted, so I got to keep asking questions. This is awesome. I want to, step away for a second, just 1 second, one question. the importance of self-custody and individuals owning Bitcoin is far superior to institutions and countries and nation states holding Bitcoin. That is my firm assessment. However, these nation states and businesses have a significant chunk of Bitcoin. You can't ignore the amount that a country like Ukraine, El Salvador, those two countries, and I believe there's one more that actually has even more than both of those. I'm just spacing on it. You have companies like MicroStrategy, Square, and Tesla who also hold a significant amount of Bitcoin. What, in your opinion, based on what we know today and what technology and offerings are available today, would you, if Michael Saylor or Elon Musk called you seed signer and asked your advice of how they should be custodying their Bitcoin, how should institutions or higher net worth individuals or nation states be looking at self-custody?
Right, and this was part of something I emphasized on stage and at the Miami conference this year, is that a diverse Bitcoin custody ecosystem is an absolutely healthy Bitcoin custody ecosystem. Obviously, myself and my collaborators, of which there are many, who are building Seed Signer, it's a model that we really like and that we have a lot of faith in. But the best practice, because there could be a fatal flaw in any of the wallets or any of the platforms like us or another one. The best practice for those kind of really large custodians, and the best practice for individual Bitcoiners who are looking to kind of level up their custody posture, is a multi-sig setup that implements several different hardware profiles and code bases to custody Bitcoin. So, for example, like a multi-sig setup that is a 3 of 5, that includes a seed signer as one of the co-signers, that includes a cold card, that includes a Trezor, that includes a Bitbox, and that includes maybe a foundation device. And that way, if there is kind of this Achilles heel type of fatal flaw discovered in one or even two of those devices, it's not the multi-sig takes that single point of failure kind of issue out of the equation, such that if there is kind of one of these fatal flaw scenarios where it's a retirement attack or some sort of other aspect of a platform is being exploited, it's not game over for you. If just one of your 5 co-signers, you still have custody of your coins, you can migrate into a new setup that incorporates a new technology and not the one that was compromised. One other thing that I point out as kind of a side note is a lot of these wallet providers have their own coordinator software that they sometimes tend to usher you into. I think Ledger is probably one of the most prominent this way, in that while a ledger can be used with a lot of open source Bitcoin custody solutions, if you're kind of a newbie to self-custody and you happen to choose Ledger as your custody device, which wouldn't be my first choice, but say it is, Ledger tries to steer you into, I believe it's called Ledger Live, which is their own proprietary software platform that is intended to help the Ledger hardware wallet interface with the Bitcoin network, or if you're using it for some kind of shitcoining or whatever, but we're going to focus on Bitcoin. That is that practice of having the coordinator software that interacts with the protocol and the hardware device made by the same entity is a fundamental security flaw. And that's something that I would emphasize to a lot of people as they're considering different custody setups. Have the people that create the software that you use to interact with the protocol, have that be totally separate from the people that create the hardware or the software that you use to interact with your coins. So like Trezor has it as well. They have Trezor Suite, I think is what it's called. It's just in security parlance, it's called separation of duties, and having the same entity create both of those sides of the coin is an opportunity for collusion that is a risk that you don't have to take. It's really important to leverage open source tools and wallet coordinator softwares that leverage the standards that exist in Bitcoin. So something like Sparrow Wallet, or something like Spectre Desktop, or Blue Wallet, any of these tools that are separate from the hardware manufacturer manufacturers. I think that's just an important thing to emphasize. But to get back to your original question, the true best-in-class security at this point is a multi-sig setup that incorporates several different hardware profiles and code bases, such that if there's a compromise or a fatal flaw found in one of those platforms, it doesn't mean it's game over for you.
And the thing that is so cool about this to me is like you just laid out. Q asked, what is the most secure setup that you would recommend or could recommend if Michael Saylor came to you? And you just went through and said that it's, a multi-manufacturer, multi-sig setup. That the beauty of this is that this is approachable for your average person. Like you can have the most secure Bitcoin setup possible for very, very low cost. And again, like Seed Signer is so fucking cool because it makes it even lower cost. Like hardware devices tend to be $100+ And what's the overall cost of Seed Signer just out of the door if you buy the components and then assemble it yourself?
It's grown, as I mentioned before, with the supply chain shortages. But I think if you find a Raspberry Pi for like $30, Pi Zero, hopefully a Pi Zero 1.3 that doesn't have the wireless communication, you can still get into a Seed Signer for $50 or $60. And again, that can be used to manage multiple keys in a quorum. That's a security presumption that some people are comfortable with, some people are not, but the possibility is there. And I make the argument that multi-sig with a single device is still better than obviously single sig with a single device. So maybe a multi-sig that's operated with just a Seed Signer is a stepping stone from your single sig setup to the multiple hardware profile multi-sig setup that is kind of the blue chip. And I also want to shout out Michael Flaxman was kind of my journey to Spectre Desktop and my journey to Spectre DIY. And he actually came up with the basic concept that evolved into Seed Signer. He's a security researcher and a cryptographer in the Bitcoin space. He wrote what is called the 10x Bitcoin Security Guide, which is, I believe, hosted on GitHub. And it at a high level, kind of things I've been outlining at a high level, he goes really into the weeds in terms of this multi-sig, multi-hardware profile, what threats that mitigates, why that's the best setup. It's a great resource and it's publicly available. He puts it out there, so I want to give him a shout out in that document as well, because it's a great resource for people.
Yeah, I love that guide. Yeah, I agree. That's one of the best guides out there. I also want to recommend Keep It Simple Bitcoin has some great guides. It's another great resource. But and I know I keep sort of repeating some of these things we're talking about, but just to be clear, a multi-sig setup is where you define, 2 of 3 separate, sets of private keys are required in order to sign a Bitcoin transaction. Or if you want to add more security, 3 of 5 of the, these devices are required in order to sign your transaction before it can be spent. And so, yeah, that's basically it. I love, you mentioned Sparrow. I love Sparrow as a desktop coordinator. It does an amazing job of showing a level of complexity that is, you don't need to understand what is happening, but it displays it in a way that is interesting and tends to inspire curiosity. So I learned a ton about how Bitcoin transactions work by being like, ooh, what does this mean? Like, why is it showing this change output over here? So for those of you that are just getting into this, personally, I recommend Sparrow Desktop Wallet.
Craig has put a ton of thought into the visual representations that he builds into his coordinator. And like you're talking about how the transactions, when you're consolidating UTXOs or there's change that comes back to you or you're sending to multiple addresses, he's a great visualizer that actually the concept we borrowed from in terms of on a Seed Signer, when you review the transaction before you generate the signatures to approve it, we do that same thing. So Craig is such an amazing builder and such a productivity beast in terms of what he's able to crank out, mostly on his own with Sparrow. There are other contributors in their GitHub, but he's doing a tremendous job as an individual moving that project forward as far as it's come over the last year, it's just been an amazing ride. Which actually, if it's okay, I do want to give some shout outs to some people, because a lot of people may look at me and see interviews that I do and think that Seed Signer is all me or mostly me. But I am just one piece to the puzzle for something that has been a device and a way of thinking about Bitcoin security and Bitcoin custody that has been an emergent sort of phenomenon that is the result of a lot of people putting in their own input and their own contributions to our project. We have two maintainers, both at different points of time. Actually, not two maintainers, two primary contributors, Keith Mackay and another developer named Nick and ICK, who have both came in and moved our project forward in amazing ways when the project needed to be moved forward. In my background, I was very deep into digital forensics, but I am not a coder. I learned just enough Python by watching Udemy videos to be able to get a proof of concept put together that showed kind of what this platform was capable of, and maybe inspired other people with much deeper technological skills than I to jump in and start collaborating. And so Keith and Nick, but then other people have contributed with so many different case designs, 3D printed enclosures to hold the hardware components together. There's a gentleman in Europe who has taken upon himself to create a cold storage solution. He's known as Sniktoshi on Twitter, and he has familiarity with metalwork and creates and sells these amazing hardware metal backup solutions that are kind of like natively compatible with Seed Signer. And I'm going to get myself into trouble because there's so many names that I forget, but take a peek. It's the pin tweet on the flagship Seed Signer account that I manage on Twitter. I recently just did a whole kind of gratitude thread because there are so many people that have contributed, from web development to the guy who created our logo, to people that sell these devices to try to get them into people's hands and get the hardware into people's hands, and then contribute a portion of the proceeds from the sales back to our development funds so we can help kind of reward contributors to the project. And there's so many people that have contributed this. It's truly one of the best decisions I made with regard to the project was when I decided to open source every last thing about it, because that made it a much broader effort than myself and a small number of others. Like, people feel empowered to leverage their own unique and special skills to make Seed Signer, a better project and a better tool and a better resource to the Bitcoin community. So that's something that I've been proud of as time goes on, how much of a collaborative effort it's been to improve and build and grow this thing.
Yeah, the level of community support for not only Seed Signer, but for all the progress that we are trying to make in the Bitcoin community is just a sight to behold. It's really amazing. And as you said, it allows for these leaps, these rapid leaps in progress, because you have these multidisciplinary experts like yourself, like the software engineers you mentioned, that are able to collaborate because we're all here for the same ultimate goal, which is the success of this critically important asset that has the best chance of being able to change the world and the lives of all of us in it. Yeah, fantastic stuff. I wanted to ask you, what are some other aspects of Bitcoin development, whether software or hardware, that you are extremely excited about? What's caught your eye that you're inspired by?
Yeah, everything going on with Lightning, I think right now is so exciting. He's another hardware tinkerer. His name is Ben Ark. A lot of people are probably familiar with him. He's done some amazing things with a Lightning a point of sale system, Lightning POS, which can be incorporated anything from like a person who wants to accept Bitcoin payments at a flea market all the way to automated vending cryptographic tricks to be able to accept Lightning payments without an active internet connection. It's truly an innovation. Some of the stuff that Lightning Labs is doing with Taro, I think, is interesting and exciting in terms of taking a lot of alternative use cases for what is fundamentally just cryptography, and bringing them back under the Bitcoin tent, because there's a lot of things that are running on alternate networks like Ethereum and such that we can do in Bitcoin, and something like Taro is such a great has such great potential to kind of bring back innovation into the Bitcoin tent, so we can focus on taking this one money and growing it into the biggest thing that can change the world, instead of focusing on all these kind of other ecosystems. But what else am I excited about? I am not. So when you go down the Bitcoin custody rabbit hole, I tend to fall behind on developments in other areas of Bitcoin. I try to keep up with Lightning as best I can, but I admittedly am not a Taproot expert. And so some of the more advanced scripting opportunities that are coming with Taproot activation, I can't speak to, but I've heard some of the use cases that excite me a lot, like some of these what I would call flexible multi-sig solutions that, in terms of inheritance planning, are super interesting to me. To where, say you have like a 3 of 5 that is your personal long-term Bitcoin savings stash, and you can set time locks such that, okay, for the first, we'll say 10 years of this setup's existence, I have to have 3 of the keys from that setup to be able to move funds or spend funds or whatnot. But with some of the more advanced scripting, you can write additional sort of conditions into the scripting that make it such that, okay, in the first 10 years, you have to have 3 keys. But what if I have some sort of critical security event that, for whatever reason, like more than 2 of my keys are taken out, and suddenly like I only have 2 keys? Potentially, like from years 10 to 20 of your setup, you can access and move coins with maybe only 2 of those keys. And then if you have some sort of further apocalyptic sort of event, maybe at year 20, assuming you still have 1 of the keys and the coins are still held in that setup, maybe you just need 1. So it's a lot of this flexibility in terms of inheritance planning and some of the more complex setups that can come with that. I'm excited by that. It adds some additional complexity to the equation that I think builders have to be mindful of, and we have to be careful about how we implement this stuff. But over time, the tools and the best practices emerge, and so these new capabilities are exciting. Beyond that, those are kind of the 2 biggest things I'm watching right now. Yeah.
Makes sense. You mentioned Ben Ark's project, and I happen to have one right here. I love this
Very
thing.
cool.
It's so cool. Yeah, very, very cool. LNPOS, point of sale, I believe is what it's called, but you can order them fully assembled for like $30. Cool, man. Well, that's all I got. Is there anything else that you want to
I have a question.
hit us with it?
So, Seed Signer, I know this may not be something that is at the forefront of your mind, but I'm sure, at least I'm assuming, there's some thought or some attention given to a lot of regulatory efforts going on just around the broader Bitcoin and crypto markets, both here in America as well as all across the world. What is, in your opinion, like worst case scenario for any type of regulation that could come out? Something that would genuinely scare you to your core?
So as an American, I worry less about some of the issues that I think you're alluding to, because I think the beauty of the nature that is Bitcoin and the Bitcoin protocol is that it all boils down to free speech. A broadcast Bitcoin transaction is a form of speech that 1 or more individuals puts out to the world. So I am less concerned about the prospects of Bitcoin from an American perspective, but I have been more concerned about some of the developments that have come about over the last few months in the EU on the subject of what are called hosted wallets and restrictions on potentially people from holding their own keys. And some of this stuff has actually manifested itself in the States too. When you want to withdraw funds from an exchange and the exchange wants to white label an address, and I'm not talking just from a security posture where it's a common security feature that you whitelist an address that you as a user have verified it's one that you control. That's more of for a security reason. What makes me nervous is when the exchange wants to whitelist an address from their perspective, in terms of when they go to a chain analysis company and they can verify that that address is not involved with some sort of activity that they disapprove of. That's the type of whitelisting that makes me more nervous. But some of the developments in the EU around self-custody, I think are concerning. I'm less worried about it in other parts of the world, like South America and Africa, because I think as Bitcoin grows, the benefits of having access to a currency that's not controlled by an individual country whose monetary policy or fiscal discipline people may or may not agree or disagree with. I think that the benefit for those developing economies to have access to a neutral reserve and transactional asset is so immense. I think the possibilities of destructive regulation in those areas are less so. But in Europe, which I see as kind of a twilight power in the world, and they're very restrictive in their control of the euro, and there's just some concerning things happen over there. So that's the part of the world that worries me the most. But I hope that if some of these more draconian kind of custody measures are put into place, I hope that something like Seed Signer and other DIY projects is a tremendous resource for people who might find it increasingly difficult to get their hands on a hardware wallet or some type of signing device. So that's, but ultimately, I think the future's bright. I think freedom wins, and Bitcoin is definitely like a manifestation of freedom, almost to the nth degree.
Beautifully put. I think that that is a great way, I think, for us to end today's thoughts and conversations. Seed Signer, we have your Twitter handle on the screen, but where should everyone else stay up to date with the project and everything else that you and your team are cooking up?
Yeah, Seed Signer on Twitter is a great place to start. We also have seedsigner.com, and we have a great Telegram chat that's active that you can find links to on the website, and also poke around our GitHub repo. I've also written an independent custody guide that I'm proud of, and that puts forth a lot of these ideas about independent custody and what makes sense to me and other people that are working on Seed Signer. So those are the touch points that I'd throw out, and we're just excited to continue to grow and refine our model.
Fantastic. Well, thank you so much. And yeah, this has been great. Everyone else, please like and subscribe the Bitcoin magazine handle, like and subscribe Seed Signer, and we'll be back tomorrow with more exciting stuff. We have a Twitter space in a little bit at 4 p.m. Eastern, which is going to be with Jen Urso and Jason Brett talking about the recent New York, the legislation that was passed recently that affects Bitcoin, and kind of where we go from here and why it is not as important as we thought. And we'll see you there on Twitter. Thanks, everyone. Adios.